Hey everybody, welcome to this kind of 5 interviews in one today. So I'm looking forward to this talk. Herwig, it's great to connect with you. Herwig Konings, he is the founding partner and CEO of Security Token Group. And Think Community, today we're gonna talk about a couple different topics. We're gonna talk about Security Token Group in general, and Herwig's gonna kind of give us an overview on that. We're then going to talk about security token advisors. Then we're going to talk about the trend of tokenization. Then we're going to talk about the benefits of tokenization with real estate, and then how tokenization will change Wall Street. And so we're going to be joined by Herwig's partner, not right this second, but in about 10 minutes, Alec Beckman, when the time is right. So Herwig, it's great to connect with you. What I love about what we're going to talk about today is kind of Wall Street without walls with Web3, as you kind of put it. And I just did an interview today at 12 o'clock with a guy who wrote a book called Blockchain Life by a gentleman by the name of Kerry. And in his book, he walks through Think Community, Web 1, Web 2, and Web 3. And to just kind of give a quick summary of to bring everybody up to speed, Web 1, which is kind of like the 91 to 2004 year, it was kind of like the whole they create, they own type of mindset. Web 2, which is kind of your 2004 through 2021, which is kind of the we create and they own. And now as we are in 2022 and as we currently are, this is being recorded 2023, it's kind of the we create, we own. Right. And so if you were to go to Herwig's website, you'll see where it says Wall Street without walls with Web3. So let's start there. Right. What does that mean, Herwig? Thanks for taking time to be on the show.
No, my pleasure. Thanks for having me. Always love talking about this entirely new trend that I think most people are unaware of happening behind the scenes while everyone's looking over at the shiny high flying stuff in the crypto world. There's a lot happening in the regulated world of finance, leveraging blockchain and crypto. And so when we say Wall Street without walls with Web3, it's a play on words, where Wall Street obviously in reference to essentially a wall where if you aren't a financial institution or if you aren't, say, a Wall Street insider, typically the game is more or less rigged against you, right? And so the idea is it's walled in. With Web3, leveraging blockchain, taking advantage of this new technology, it makes it easier for digital participation, for global participation, as well as for all kinds of new capabilities. That's part of the we own part, being able to use your stock to your advantage as opposed to having it sit on a broker. And so that's what we're talking about. Security tokens in a nutshell. We've heard about the cryptocurrencies. We've heard of a lot of different use cases for blockchain, but the one that I'm talking about is for stocks. So we've got regulated investment products. There is no question about whether or not the SEC should be doing anything. They are the police in this world, and there are rules and regulations that are set out that we need to follow. But think of the blockchain as essentially a better ledger, a better system to manage a cap table, to manage compliance information, to make it easier to track a stock. Think of it like a digital receipt, where a token is essentially just a digital receipt of your stock that you can now take advantage of in a number of different ways. Still, all the same rules are followed on Wall Street. There's usually transfer agents, there's usually brokers. It's not just a free for all like we see with crypto. Hence Wall Street, but without the walls, aka global access using security tokens.
But let's kind of younger it down even more, right? So security tokens, it's sometimes it's hard, I think, because where's the tangible piece of it, right? So like, what does that mean, a security token, right? Right now, if I want to check my stocks, I go online or I get a statement, right? So kind of evolve it from there as far as, the average person is going online, they're getting statements, they're calling their wealth advisor, they're investing themselves maybe on an app. So how, what's the evolution of that?
Yeah, and you nailed it. You even kind of started walking through. People are starting to get used to apps. The experience of trading has gone completely digital. The step above that now is that mention of the digital receipt. So normally when we invest in a company, we're essentially, for lack of a better word, we're on an Excel sheet somewhere, right? We're on a database with our name, and that is manually managed, usually by a lot of humans, right? Addressing, okay, this person needs this dividend, or, to send this statement, we've got to check their portfolio and we got to do this. Now with a digital receipt, you're actually getting, instead of being on an Excel sheet, you're getting a token that represents your investment. And that's a major game changer. This is what I call self-custody for your stocks. And that's not something we've seen since the old days, right? Back when bearer stocks and bearer bonds were around, people held their stock. That was who owned it. And then, of course, that became outlawed by regulators. It was, sort of taken upon intermediaries like brokers and the different agents on Wall Street to basically represent this for people. And now with technology, we can enable that same level of regulation, but still allow people to own their stock. And so for example, what am I doing with it? Well, what am I doing with it? I could send it to somebody else. I could bring it to different exchanges and marketplaces. So now you see stocks dual listed. I could take it to a variety of different potential lenders to go ahead and collateralize my stock and get a loan out. All of these things would be traditionally extremely difficult to do because they're, require lawyers and attorneys and typically a lot of just checks and back and forth compliance in order to enable these transfers of value, which has been completely streamlined by the blockchain.
But again, I just want to go back to, understanding kind of, so people understand the token is what? Is it a real token? Is it a piece of paper? Is it an email? Like define what a token is.
The token is, in this case, exactly the same as a share. It's a representation of the share. It is not a mirror. It is not a new construct. It is not separate to the shares. If we started a new company today, and you and I are the partners, and we decided to, structure a cap table, you get 100 shares, I get 100 shares. We would then tokenize each share, and I would have 100 shares of the business, and you would have 100 shares of the business. Now, instead of having to go through attorneys and a lot of different procedures in order to onboard new investors or partners, this has become much easier. We have someone who wants to invest. We go to a platform that can support our token. Now that platform will check who the investor is just to make sure all the compliance things are met and enable them now with their own capability to own the shares. And therefore they can then buy them from us. That's all done instantaneously on the blockchain. And of course, recorded on the blockchain so we can see that transaction occur. Now we've got 3 members and we decide, let's go find somewhere to trade these things. Now we've got digital venues that are popping up left and right, all regulated again. Not something that we could just start overnight. These are regulated brokers that are saying, hey, we see the world of securities moving on chain, and we want to support those who are enabling what I would almost call financial services for your stock, where now that it's a token, I can go out and I can get liquidity, I can transfer it, I can leverage it, I can get more insight, who the community is and the holders are, et cetera.
Got it. How are you and people in your industry going to train people up on this, right? Generations and generations that are so used to doing it a certain way. There's the early adopters and then the laggards. One of my favorite books I read 25 years ago was, Crossing the Chasm by Jeffrey Moore. But it seems like a large percentage of people are going to wait till the innovators and early adopters kind of begin to own it so they can kind of explain it. You know what I mean?
Totally. In fact, this industry has been happening for 5 years now. In fact, before I started in this whole world, I actually started a company almost a decade ago called Invest Ready. We provide accreditation software. So this was almost like a pre-step to this new evolution where we saw investment programs, crowdfunding portals, et cetera. They were going online, enabling this new digital access for people to invest in private opportunities. And we were the compliance software that would make sure that if people were accredited or not, they were able to qualify and participate in the deal. And so I got basically a crash course in securities laws from running that company. And eventually in 2017 was when we started to see the first tokenizations of real securities start to happen. We saw a couple of funds tokenize their limited partnerships so that those investors could easily trade in and out of the fund as opposed to having to wait for the returns of the fund to be distributed. But we hadn't seen a company tokenize stock yet. And I had the opportunity to advise one of the very first here in the US, where it was a facial recognition company doing a Series B. That was sort of the beginning of the very basics of this industry. Since then, we've seen over $1 billion in venture capital back the infrastructure, if you will. What I mean by that is tokenization platforms that make it easier for businesses to set themselves up for the blockchain rails, as I like to say, and then issue these new digital receipts, these new tokens to their investors so that they can then go ahead and leverage all of these new benefits. We've got broker dealers that are raising money so they can bring together the liquidity. What we do as our advisory business, where we started helping others understand this technology, that's the biggest part of this. We have tons of education and research that's out there for free. And I think that's the easy, but definitely not actually in practice easy answer. This is super complex stuff. You've got elements of investment banking. You've got elements of equity crowdfunding, compliance, blockchain, all kinds of different factors that make this very, very unique for any entrepreneur or fund manager or asset manager to want to go through, right? And so because this is complex, our consulting business as part of our portfolio is critical to helping issuers and investors understand this technology. We do a lot of workshops. We do a lot of education. We have a great research report by Peter Gaffney, our head of research, the state of security tokens. You can find that at reports at securitytokenadvisors.com/reports. Right. So there's lots of good intel out there. And then we do have a media company, Security Token Market, a sister company that we also have the Security Token Show. Where every week we come out with the latest what's happening from the industry, from the institutions, from the people that are actually raising money or trading securities, and making sure we create an information space that people can plug into, that we can actually learn what this technology is.
I love it. I love it. We were introduced through Jackson Blau, who works with you guys. I shared with him, and I'll share with you. I only understand like 17% about what you're talking about, but being 50, and when I was 23, started an internet company in the Web 1 world. I as I listen sometimes to you all, and I'm studying all of this and doing my best to learn more every day. I think about how confused people were just as I was describing what a website was, back in 1995. But I love that you guys have really owned the idea of education. I think that's huge. So let's bring in now your business partner. Oh, hold on, I got to change that. Otherwise, we can't see your face. Let's see what we got here.
It's okay. I have a face for radio anyway, so.
You have a face for radio? Yeah. Let's see what we can do here. There. All right, we'll do it this way. Hold on, I gotta just. Let's see if this works.
There we go. Oh,
there we go. There we go. All right, so this isn't really a frequently asked question, but all right. So we gotta. I haven't had 3 people on in a while. All right, so Alec Beckman, great to connect with you. Hold on, I'm just gonna get rid of this because everybody knows what this is. All right. So, Alec, it's great to connect with you. And, you are a co-founder with Herwig Security Token, and we're talking about the advisors piece now, right? So Herwig has been talking a little bit about what, kind of giving the lay of the land of the company. And we just started talking about the training and this. So talk about security token advisors?
Sure. And quick distinction, as much as I'd love to take credit for this, I'm actually not a co-founder. I was recently brought on due to my experience in the field. But quickly, security token advisors, we help companies all the way from education about the space, about the security token space, about what's out there, what has been done so far, what has been done that's correct, what has been done that's incorrect, which is usually more important to learn from the mistakes. But really, what we're trying to do is provide regulatory guidance, not legal guidance, but just how the actual frameworks are set up with securities laws, and help structure deals and help groups execute on successful tokenizations, and ultimately ending up listing on secondary markets, because that is probably the primary use case that we're seeing today is for liquidity benefits of private companies.
Okay, all right, good. And so how would companies utilize security token advisors?
Sure. So there are a lot of ways that you can utilize security token advisors. I think the first one would be through the education piece. There's a lot out there that is said about tokenization. Some of it's true, some of it's absolutely not. A lot of what is said is fairy tale stuff, just things that are nice dreams that are nice to say and maybe attract a pretty good headline here and there. But our job really is to differentiate between what's real and what's not. So really coming in with groups, helping them understand, again, the regulatory aspect, but also what is out there that people can actually execute on. What are we capable of doing today? And also what is going to be around in the future. So we'll work with companies, we'll help them break down their business requirements and business models to understand what their exact platform and what tokenization needs to entail for them. And then what we'll do is we'll actually help them execute on that, whether that's structuring investments, helping them pick partners in the space, helping them with liquidity and listing strategies, ultimately to take them from a traditional private placement asset to a digitized private placement asset, which has benefits like liquidity, like data transparency, which are two big things that the private placement assets of today and in the traditional finance world struggle with.
Okay, so let's talk about a company who wants to evolve and elevate to this. They're used to doing things typically the way things have always been done, and they're looking at this and like you said, kind of helping companies figure out, what they're, what's capable, what's out there, and so walk me through kind of that very first meeting that you would have with a client, right? So a client in this case who is used to doing it only what I'm calling old school, and you're coming in. What are the first couple questions you have for them?
Sure. So the first thing that I need to understand is what is your motivation behind tokenization? This always tells us a lot because sometimes people come in and too often people will explore the space with the goal of raising capital and having access to new forms of capital, new investors, which is always a little bit of a red flag. It also means that they probably haven't researched tokenization a lot. Not that there aren't new investors or new angles to be had, but if somebody is coming in for specifically for investment purposes, it typically means that they haven't been successful in the past raising traditionally, which raising through tokenization probably wouldn't help because it's a smaller group of investors.
Okay.
I think that if somebody comes to us and says their motivation is secondary market liquidity, or they want to set up automation in their processes with fund administration, with buybacks, with lending, with all these different products that can be really created and perfected through what blockchain allows us to do. I think that's a more telling piece, and that is a group that we want to work with. So I'll give you an example. Somebody came to us recently. They were a broker dealer, and what they're focused on is data transparency. They want third parties, like lenders, like appraisers, to be able to access audited and verifiable data through blockchain, which is a really great use case and something that is not as available and is a huge manual process in today's like traditional finance. So that would be a good use case and someone we would want to work with.
Gotcha. Herwig, anything to add?
Yeah, no, I think Alec nailed it. You know, that the three types, I think, of clients that we see are the ones that are looking to learn, right? As we've identified, the world is moving on this, and there's definitely been a lot of, let's call it, marquee examples and case studies of tokenization where the benefits are there. So now you have other banks, other investors, other asset managers, whoever it may be, they're saying, hey, tell me more about this. We're not necessarily ready to move, but we are trying to learn. Then you've got the others that maybe are a little bit more nimble, whether it's the entrepreneurs or the family offices. They're looking to, start playing with it right away. They want to say, hey, we want to tokenize something. We want to bring an asset to market. We want to construct something for our clients. Those are the types that are, often a lot more fun because they're actually in the weeds. And then last but not least, we even see the infrastructure, right? Those who are trying to take advantage of this opportunity. We're talking about what we believe hundreds of trillions of dollars of securities, just real estate alone, that we believe is going to get tokenized over the next decade or two, which means there's a massive opportunity for people to provide these new either solutions to help real estate get tokenized, for real estate to trade, for real estate to be leveraged, for real estate to be valued better. We're seeing all of these new solutions come to market. So I think we're going to see a massive, distinction in how people start to invest as a result of all of these new entrepreneurs who are bringing in this new, wave of tokenization.
Yeah, I love it. I love it. It's great. All right, guys. Anything to add on this before we move into the trend of tokenization? All right,
No?
let's move on. Let's move to the trend. We've talked a little bit about it. Herwig, you mentioned a little bit of kind of the evolution of it. Alec, you've kind of referenced it too, but take us kind of where the trend, as recap a little bit about where it's been, where it is, but really, where's it going? Where are we 10 years from today, 5 years from today, 3 years from today, when it comes to tokenization?
You want to lead this one, Alec? I'll follow on.
Yeah, sure. So I'll tell you where I see it. I think that this is a really great opportunity for existing assets to come into the space. Right now, it's a very small industry. You look around, and if you look at security token market, which aggregates all the data of assets that are live and trading that are tokenized, I think you won't see a lot, right? And so there's a lot of opportunity. As Herwig mentioned, there's trillions of dollars of private assets out there that could benefit from this through the data transparency piece, through the liquidity piece. But the piece that I see and where I think our big initiative in 2023 is, I think where this industry is headed, is to build off of liquidity. A lot of people associate liquidity with trading. So when you think of liquidity, you think of being able to list an asset or individual pieces of equity on an exchange where it can be bought by other qualified individuals, which is a really cool form of liquidity. And eventually there will be really mature marketplaces and really mature underwriting and an opportunity for these assets to really trade, probably not at a high frequency level, but enough to where somebody who needs liquidity in a private asset can achieve that. I think that the better opportunity and a better form of liquidity, and something that we're focused on now, I think where this industry is really headed, is on the collateralized lending piece. So if I'm an owner, if I'm a limited partner in an asset and I own $100,000 worth of a real estate asset with objectively appraised value, what should be able to happen on chain, and probably one of the best uses of blockchain in this space, is automated collateralized loans. I put up my $100,000 worth of collateral. It's bringing in rental income because it's a real estate asset. There are predetermined terms such as interest rates, LTV, which are set and which I can always take out a loan on instantaneously. And then from there, what I'm able to do is I'm able to actually take the rental income that I would get to go towards paying back the interest and eventually the loan. That is a better form of liquidity. It's not a taxable event. So, it's not trading. You don't have to pay capital gains. And it can be instantaneously done. What needs to be done there is there needs to be lending pools set up. There needs to be custodians in the space with money transmitter licenses and custodial licenses. And eventually banks will be behind this. But that is really what I see the opportunity is. I, as an asset owner, can get liquidity through instantaneous loans through a blockchain.
Yeah. Define eventually, because, here we are recording in 2023. When is this, from your assumption, when is this the norm?
Sure. So we're already seeing examples of this. And I'd point to a couple of our partners. You can look at Realty, which is a platform in the space that focuses on Section 8 housing in the Midwest. They're already proving this concept with a company with a decentralized lending protocol called Aave, where they're able to permit loans against some of these pieces of equity. I think you see a lot of some of the players in the space. There's a group called Centrifuge, which is tokenizing and then going to set up lending pools against $230 million worth of assets. That sounds very impressive, but that's really a tiny number when you think about the grand scheme of things. So while we're getting to these great points and historic moments of innovation in the financial world, I think we won't see this be popular and overcome billions of dollars worth of assets for another probably 2 to 5 years.
Mm-hmm. Got it. So, I'm curious, here we're recording this on in early 2023, but, AI has taken the world by storm, right? Because on November 30th, ChatGPT was, and it just ignited, a complete change in how things are going to be in so many areas, right? And so now I think as we watch the fight to become the best AI company, the best AI country, to see who will really be calling the shots, it sounds like will that help accelerate this? Do you think, just because people are going to be more kind of ingrained in technology that they thought at one point was too difficult, and now ChatGPT just kind of made it easy, the Jaspers of the world, et cetera? How do those go hand in hand with the evolution of what you're doing?
Sure. I see it really being able to accelerate a lot of the building of infrastructure in the space. Some of the stuff that I read about ChatGPT, and by the way, one of the cool things about our company is we're embracing this technology. We've embraced the tokenization aspect because we believe it's a better financial future. We embrace things like AI because we think it can help build a lot of what we're doing today. So you read about some of the cases of ChatGPT and them being able to actually write code into very specific use cases. And I think that it can really accelerate some of the building. Some of the downfalls of this space is it's a very emerging and new market, meaning it's not attracting the level of developer that Google's and FANG stocks are attracting. So being able to reduce cost, because a lot of these companies are startups, and add to the speed of which you can build specific pieces of technology, I think that will rapidly accelerate what we're doing here. I don't know, Herwig, if you have any other thoughts on that.
I mean, AI is for sure, another one of those rails. And I, for one, would like to see blockchain actually become a foundation for AI. There's a lot of data and a lot of information that, can be tracked, especially when you start to leverage AI beyond the simple use cases of write me some content. They can get pretty advanced. We even see a company like Accrue. They use AI to feed together a bunch of different asset data and recommend, based on your portfolio and things like that, how you should be trading or what assets might be a good fit, et cetera. Yeah. So those are definitely cool components. And I think for sure that always accelerates the adoption timeline, right, when it comes to technology, especially when it creates like this overnight type paradigm shift. I don't think that's going to happen with tokenization. This idea that overnight suddenly everybody is going to tokenize their asset is just actually impossible. because unlike, say, what we saw with NFTs or cryptocurrencies, anybody can go and make those, right? The infrastructure came about and enabled it to be really easy to add an image to an NFT and sell it, right? And so those things are not possible when you're dealing with investment products. You need to go through lawyers. You need to go through brokers. You need to go through, these steps that definitely require thought and care before you just go ahead and tokenize a financial instrument. And therefore, it usually takes months to even go ahead and prepare for that process. And then worse, unlike, again, with these tokens that are unregulated and therefore are purchasable and tradable by anyone, all on these new rails of blockchain, security tokens have to go through checks and balances, as well as they have to go through what they call, I forget the exact term, but it's like a retirement period, right? It's you need at least a year locked up, restricted trading before you can actually leverage a broker and enable an entire market for most private securities. If you're publicly registered, whole new different ball game, and we've seen that happen. As well as we've seen other exemptions like Reg A Plus, where you can raise up to 75 million from anyone around the world and then instantly trade the next day on a broker. What we're used to, specifically in the private placement, which represents 95% of all private placements, Reg D, that has a year-long lockup period. And so, great, we can tokenize. Okay, tokenization leverages the traditional old way, as you say, John, right? When it comes to the legal, when it comes to the regulatory framework, but then we leverage this new layer of blockchain for new features, the digital access during the primary offering, the secondary trading during the seasoning period. That's the word. Being expired. That's great news that you can now leverage that. But there's always this sort of usually a 6-month or year-long break after you go through this process. So the idea of, hey, overnight, we're going to see thousands of new available investments trading, that's unlikely. But what we will start to see is a slow snowball growing effect of more people doing it, more people becoming comfortable with it, more banks using it, more applications becoming available, that people get comfortable with the technology. And I think it was Boston Consulting Group that did a study, and they said, roughly 10% of all securities should be tokenized by 2030. I think it's going to be a lot faster than that. But I think Alec is right that for the next year or two, we're going to continue to see use cases, slow increase in interest, but we're not going to have, unless we have, actually as one quick example, AMC, the movie theater company, they actually offer their shareholders free popcorn. The way that they verify if you're a shareholder in order to retrieve your free popcorn is a self-certified checkbox, because there's absolutely no way for AMC, the public company, to know who all their beneficial shareholders are, because it's all on a broker's book. If it were on a blockchain using a security token, I could take my security token to AMC. They would know I own the popcorn, and maybe they could see I own more than one share. So maybe I get even more perks. That's just one of the features that tokenization will be able to do. If we see events like that, AMC actually considered this at one point and didn't pursue it, unfortunately. But once we see major companies start to employ this technology, we're going to start to see that adoption curve speed up.
Yeah, it's great. It's great. It's so cool. I mean, this is, I just, before we move on to our next topic, which I know we're going to talk about, kind of the benefits of tokenizing real estate. For somebody who's listening, and Herwig, you talked a little bit about this earlier, this isn't crypto. This is regulated. There's rules. There's, I think the scary part for many, many people about crypto was all of those things that we're reading about today, right? There was no oversight. Nobody knew who the person was that they could go to. I mean, we could list all the negatives, and, Warren Buffett is one to say that if I don't understand it, I don't invest in it. And it was very confusing. I think this, for many people, not for all, but for many, is confusing, but it seems to just have a regulatory backbone of oversight, right? Is that so? Just kind of talk about that a smidge more, to kind of, so as we continue and move into the real estate element, that there's that the safeguards of tokenization?
100%. We are, we're leveraging the, securities laws that have existed for over 80 years, right? Since they were first really introduced in 1933 and 1934. So when we look at crypto, the big problem with crypto is everybody who issued tokens, their major goal was to avoid being labeled a security, which is what we're talking about. A security being an investment product. If you're labeled as an investment product, this automatically means that the SEC is now going to enforce you as an investment product. And therefore, you have all of these new rules that you need to follow, rules that typically require verifying who you are and who the owners are of these tokens, right? With Bitcoin, we don't know who owns the Bitcoin per se, unless you can identify ownership to a wallet. Otherwise, we don't know who it is. With a security token, we have to know who it is at all times. There is no situation, no scenario where it is legal, at least, where there is a floating security that can be attached to anybody. There's other guardrails like investor protections, right? This is why the SEC has to go after these ICO products or these crypto products, because they actually are investment products, but investors don't even realize it is an investment until the SEC says, hey, we think you're breaking the law. You're not filing as a security when you are an investment product. And if you are an investment product, by the way, all of these investors are entitled to their money back because, again, you violated all these securities laws. So that's why with security tokens, you can't get hacked. You don't have to worry as much, because there are brokers that are doing background checks. There's usually a lot more information. When you're investing, you're not buying a token. There is no just algorithmic, purchase. There is a process where you will sign a legal document, usually a private placement memorandum, where you are now have a legal, entitlement to your investment. So no matter what happens to your token, you can be reissued. You can, worst case, go to court. But that's the beauty of this. You don't have to. These rules that are put in place, these guardrails, allow it for us very easily to issue new tokens, to burn old tokens, essentially removing them from the marketplace. And all of this is done transparently and publicly by usually some kind of a licensed entity, whether it's a transfer agent, again, whether it's a broker. There are different, participants and banks and the like that help make this a safer environment to participate in.
Great. All right. So moving on to part 4 of this, what feels like a PhD master's program at the Ross School of Business. Let's talk about benefits of tokenization in real estate, right? So where do we begin? I mean, historically, if we just look at real estate and we go back 50 years, it was owned by mostly ma and pas, and then more of, and especially in the last, I would say, 20 some years, institutions have really moved into that space in a very big way, even in markets like where we typically saw a majority of ma and pas in the mobile home parks and the multifamily. We've seen over the last couple of decades institutions really come in strong all over the country, and in primary, secondary, and even tertiary markets, in markets all over the country, and really the world. But we're in Michigan, so we're talking the country, or we're in this United States. And so talk about kind of not only the benefits, but the types of companies that are using tokenization today, and who will start using it in the 2 to 5 years from now, like you mentioned earlier, as this evolves.
Yeah, Alec, maybe you could talk a little bit about your background real quick. I think you're a great authority on this topic.
Sure. Yeah. So my background's in real estate. Actually, both John and I had the pleasure of working for Marcus and Millichap, the brokerage. I used to focus on industrial and net lease assets. Actually, real estate brought me into the space. So I had left my job in real estate. I had started a consulting company, and I was working with a developer essentially to find out how real estate and blockchain intersected, to which we ended up tokenizing a $300 million portfolio of office and hospitality assets. But real estate is probably the most uniquely positioned asset class to engage in the benefits of tokenization. One, it's an extremely illiquid asset class. Just naturally, 99% of real estate is done through Reg D, private placement, only available to accredited investors, no secondary marketplaces, and they typically have long holding periods. So for the LP side, knowing that you don't have to wait that 5, 7, 10-year holding period that the general partner wants to accumulate value and bring in rental income, knowing that I can achieve some liquidity before that is very valuable for the limited partner. For the general partner, they want to be holding these assets forever. And the reason that they don't hold these assets forever and why they transact them on average, 7 to 10 years is because they face pressure from their limited partners when they're raising capital that they have to sell this property and return their principal back, plus the appreciation. In this case, you get the best of both worlds. I can allow my limited partners to get out whenever they want, and I, as the general partner, can hold this asset for as long as I want. So I think that's the immediate benefit. The other thing is there's so many third parties within real estate, they won't go away. I think that there are some that can be improved through blockchain, such as title. I think that brokerage and lending can be improved through blockchain as well. But I think being able to give a lot of the data on the asset, on the equity, on the debt to other third parties, such as attorneys, such as lenders, and people that such as appraisers, to actually go out and use for what they do every day. I think using blockchain is a tremendous use case for that. And so real estate is truly a very unique and very ripe asset class to undergo tokenization. And the last thing I'll say is real estate. I think anybody will admit this who's in the real estate industry. It's a very fragmented market. There's a lot of manual processes. There's a lot of paperwork that's done. All of this can be automated. And one of the things that we do, and while tokenization is focused on the ownership side, the tokenization platforms that we work with and plug real estate assets in with are actually providing more than that. They're providing fund administration capabilities on an automated level. They're allowing you to work with other third parties like broker dealers and like lenders and like appraisers. There's going to be more transparency in value, because if I'm raising capital and we need to verify information, we're gonna get an audit. We're gonna get an audit, and then we're gonna put it on the blockchain, and it's gonna be verifiable and immutable, which is really valuable. So I think real estate is a really good use case, and I think the players, to get to the second part of your question, John, that are using it and will be using it are really in the private equity space. So I mentioned that 99% of these deals are done through private placement Reg D. These are all really good assets that fit what we're doing. So we're seeing a lot of private equity groups in the real estate space moving, at least exploring the tokenization side of this. But it's really for anybody that is a general partner that has limited partners and wants to create some sort of flexibility with their capital stack.
Yeah. And so what are the two biggest, one or two, maybe three biggest obstacles for people to even walk into the space?
Education, I think, is the number one thing. Just understanding, because actually going back to the question that you asked Herwig, you asked what is confusing about this, and people get scared because of crypto and because of blockchain, and take the word token out of it, right? This is all we're doing is we're digitizing private assets and allowing them to be more flexible, be more liquid, be tradable. You think about the assets that you hold. If you have a Robinhood account or a Fidelity account, these are all digital assets already. The only thing and the reason that we're tokenizing them is because of the layer that blockchain adds. All blockchain is a database, right? It's a database that holds information really well and can't be manipulated. So adding the database component onto ownership is really valuable and can make things move a lot quicker in a very slow industry.
So cool. I mean, it's so fascinating. And so how does someone, and who are the someones that need to get educated within a company?
So I think anybody that deals with the capital raising side of this, I think anybody who's doing investor relations, I think anyone who interacts with investors on any level needs to become familiar with what we're doing here. This is also a value add on the primary side. If I'm raising capital and I'm an investor, or that being said, let me flip the situation. If I'm an investor and I'm looking at investments, and you give me two equal investments and they're the exact same, but one is going to be liquid, then I would much rather take the liquid investment because I don't necessarily want to hold my money up for 8 years. I think it also gives investors more flexibility. If I know that I don't have to have my money tied up for 8 years, and I'm using 8 years as an arbitrary example, but I may be willing to put more money in because, the thought is I only have so much investment capital. I need to keep a decent amount in liquid investments. Interestingly enough, I believe it was the Basel Commission, which is a big securities, body. They deemed that tokenized assets are actually highly liquid assets, which is a huge win because that shows exactly the thesis that I'm saying here of there is more that you can do with an investment if it's a liquid asset. And now that it's being recognized as liquid assets, tokenized assets, that it's proving our point to a T.
Yeah, it's great. Anything to add, Herwig?
No, I definitely could go on and on. I think for the both of us, to Alec's point about transparency, we've even seen rating agencies like Morningstar. They've seen tokenized debt, for example, securitized debt, and rated it specifically from a double B to a triple B because they were using Ethereum to track the debt, and therefore there was more transparency. When it comes to real estate specifically, I think the idea that you can actually automate your distributions is massive for CRE, for yield-based real estate. There was a company that Alec mentioned earlier, Realty, that was at one point they were essentially enabling daily dividends thanks to this technology. So they have thousands of shareholders in their real estate property that are trading it randomly through all these different capabilities. The cap table is being automated automatically. And I could take the rent from Monday, Tuesday, and Wednesday. Alec could come in and buy my token, and he would be getting paid Thursday, Friday, Saturday, Sunday, just by them collecting the rent manually and then programmatically structuring it so that it pays out the owners over the next 30 days. And that ownership can transfer according using the blockchain and updating the compliance records that are required in order to make these transfers possible. And so this idea that you can now automate distributions through real estate, you can have something that could potentially be liquid. If it's liquid, guess what? Lenders are going to give you better terms too, because now they know that in the event of recovering the asset, they could just go to this digital marketplace and sell the asset as opposed to be responsible for doing it themselves. Alec touched on valuation. There are providers that are specifically just and raising millions of dollars in venture capital, being backed by the like of Apex and others, startups like this that are just focused on how do we make the asset level data more valuable for investors, let alone forget the trading, forget the tokenization. How do we improve so that if I go to find a real estate token, I can look up in the metadata, oh, here's the occupancy rates. Here's the delinquencies on all the rentals, all kinds of information that can be plugged in that, as Alec mentioned earlier, can be used programmatically or just manually to understand an investment better. And so we believe real estate is just going to get turned upside down over the next few years. And again, this is happening today. We have in our backyard here in Miami, there is something called the Thesis Hotel. This is a multi-$100 million real estate project done by NRI, which is a multi-billion-dollar developer, I think out of Michigan. But needless to say, they did this project where it's a hotel, it's multi-use, it's got commercial, it's got restaurants at the bottom. They basically took half the building, more or less, let's just say arbitrarily, went to their traditional investors who said, I want nothing to do with, the blockchain. I want to do it the normal way that I've been investing with you guys. And then took the other half and they went to a platform called CrowdStreet, where they publicly raised through this crowdfunding portal the other half that they wanted, and in a very fascinating structure where you're invested in the operating units of the real estate of the thesis hotel, so you can leverage those tax benefits. But when you want liquidity, you convert from trigger into a UPREIT structure. Now you've converted into REIT stock, and that REIT stock is tokenized. Therefore, essentially, when you convert, you get a token, and that token you can take to a place called SharesPost, which is one of these brokers that has elected to list this offering. So we've got this live, a full life cycle of a company that is tokenized, raised money, real big real estate project, and soon it's going to be trading on one of these platforms. So definitely, as I mentioned earlier, it's going to start happening slowly, more and more, until next thing you know, it's commonplace.
Yeah, that's great. It's great. Well, it's great to know that there's live stories and real time things that people can look at and use as a guide, as well as having the two of you guide them and people within your company. And so moving from real estate to Wall Street, right? We kind of started off kind of talking, today a little bit about Wall Street without walls with Web3. So I think it's probably a good way to end this kind of 5-section discussion on how tokenization will change Wall Street, right? So we're talking, think community. We've talked about just tokenization in general and what advisors do in this space with their clients and the trends that we're going to see and the benefits in real estate. And now let's kind of bring it back to Wall Street, how it will change Wall Street. So let's kind of use this 2 to 5 year window that we have been talking about today. So we're recording this in beginning of 2023. Where are we by 2025? Where is Wall Street?
People love the prediction questions. Definitely no pressure, right?
But let me just put a footnote in there, right? This is based on Q1 2023 predictions based on indicators. So whenever you're listening to this, no one on this podcast can predict anything, including for sure me, the two of you. No, all respect, but everybody's got to do their own research at their own time with their own companies and their own things and make decisions on what they need to do next. So, the two of you are guides sharing information that is real time as we speak now. But as we all know in the world, this could have a shelf life of years, and it could have a shelf life of a week. So just make sure that whoever's listening to this, you do your due diligence to make decisions on what you want to do as an individual and as a company. That is critical. Okay.
That being said, we're going to come back in 2 to 5 years, and if we're wrong, then we'll be publicly ridiculed. It's okay.
No, people won't even remember. Things will evolve and change so many times, right? So, but if we have a crystal ball and we can look and make an assumption and where indicators are pointing us, what is today's picture showing us?
We are here on this call for a reason. I actually, on our podcast, we've been doing it for several years now. I actually have a pretty good track record.
This is iced tea, by the way. This is not beer. I'm not having a beer. Okay.
We're almost at happy hour.
Right.
But now let me set the stage real quick before I kind of break down, where I see it's headed, which is it wasn't more than 50 years ago where we saw the great paper crisis on Wall Street. This is literally where there was so much of a buildup of all of the stocks being traded hands amongst all the brokers and investors on Wall Street that it had to shut down because they couldn't keep track of everything anymore. It was shortly after that the NASDAQ, the first electronic stock exchange was created. And we started to see this new sort of paradigm shift alongside the SWIFT network. And Wall Street hasn't really changed all that much since, other than the advent of, say, brokerage apps that make it easier for the retail investor to trade. Right. Other than that, it's mostly the same old infrastructure, which is why we've seen, maybe we recall GameStop not just a few years ago, where we actually had a situation where it was being shorted 130% of the value of the company, which shouldn't be possible. But the reason for this is the way that the mechanics of Wall Street are structured, where you've got market makers and multiple brokers changing hands. You've got different transfer agents backing the whole thing. And then meanwhile, you have all of these different sort of participants that help feed the compliance, feed everything, make sure it's all right. So that's why you have 2 to 3 day settlement times. That's why you have no transparency into who the underlying beneficial owners are. The blockchain is slowly changing this. It is something that maybe one day might even be required by regulators. But until then, what we've seen is Wall Street sort of say, okay, let's take advantage of this technology without being too loud about it. Up until last year, where we saw more announcements by big banks saying, hey, JP Morgan, in the last several years, they've launched a repo markets network that trades hundreds of millions of dollars, billions of dollars daily of tokenized repo contracts. You've got the tokenized collateral network. This is a lender network leveraging the blockchain that JP Morgan has set. So just what Alec was mentioning earlier for real estate, already privately being used by JPM with Goldman Sachs and many other participants. We've seen the likes of tokenizing ETFs by BlackRock and PIMCO. We've seen feeder funds set up by KKR and Hamilton Lane to enable lower ticket prices. So where I would have to pay $5 million to get into their healthcare growth fund, I can now pay $100K via this feeder fund that's tokenized and may even be liquid into access to one of the institutional funds, if you will, that normally isn't available to your traditional investors, right? So the reality is I think based on our article, I think it's something like 50+% of big banks all are working on something. Cross-border swaps, Project Guardian. This was between the Singapore Exchange and JP Morgan doing cross-border settlements instantaneously, right? Game changers for finance across the board. I'll let Alec follow on that.
Well, no, I think you did a really good job covering kind of where the market is and where it's headed. I would talk about a really cool use case that's very specific, and we're already having conversations about it, but the idea of taking public stocks private. So public stocks cost an incredible amount every year in listing, in disclosures, and all these different things that they have to do to remain compliant as a publicly traded asset, where the reason that they do it is to have liquidity. When you start a company as a venture company, your goal is to get acquired or to go public, and it's an exit event, it's a liquidity event. In this case, what you can do is you don't need to go public. You can stay private while having liquidity. So one of the things that kills a lot of, and I'll use pharmaceuticals as a good industry as an example, because we've had some conversations here. The pharmaceutical industry is absolutely crushed every year by naked shorting. People will bet against these companies. They have financial interest in these companies failing, which, as we saw with the whole Wall Street bet situation, is not really an ethical thing to do. So one of the things that is really cool about the private markets is there's no naked shorting. There's no betting against companies. So while these companies are getting killed, but they need to maintain some level of liquidity, they can move private, they can reissue their stock and buy it back, and they can ultimately maintain forms of liquidity for their investors without having to worry about naked shorting killing their business, without having to worry about all the costs and disclosures that go into remaining a public company every single year. It can really help companies lean down. It can really help companies, add efficiencies. And then ultimately keep the benefits of having that liquidity event, but without all the headache that comes with it.
It's great. Well, I think, so let me ask you a question. One, what's the first step any company, small, medium, large, should do if they want to explore, get educated, or jump into tokenization?
Go to securitytokenadvisors.com and hit book a call.
Yeah. Yeah. Well, I think, I mean, if we just talk fundamentals, I mean, we talked about so many things today. And so fundamentally, I think community, if this is something that you want to dive into, look at, explore, and dive into the world of tokenization, it's really important to get educated and use, the advisors that you have at your fingertips to help guide you along the way. Herwig and Alec, you guys have been great. So tell everybody all the different areas they can connect with you.
Yeah, no, like I said, Security Token Advisors, great place to start. We also have a lot of different resources there. I mentioned earlier, we do an annual state of the security token industry report. So you can go check out not only just 2022, but what's been happening in the past few years. Also stm.co. This is security token market. This is where we have, all the latest news on the industry, but also all of the data. So this is, if you will, your Yahoo Finance or your coin market cap for the crypto people. This is where you go, stm.co, to find out the St. Regis in Aspen. That's currently trading. Anybody can go buy it. What's it trading at? This is all the information in one place that you can go find, not to mention a ton of other resources like the Security Token Show, interviews and with the industry participants and those who have done it. And I know, Alec, maybe you can talk a little bit about some of the webinars and some of the things like the Success Network.
Sure. Yeah, we like to put out content all the time and just talk about what we're doing, but really not about us, about what our clients, what our partners, what other people in the space are doing on the technology side, on the issuance side. So we have a lot of clients that we've done webinars with. We have partners that we do webinars with constantly. We put out articles, every single week about what's going on in the space, not just from a headline perspective, but also from a conceptual perspective, a thought leadership perspective. So I think just looking into the industry, talking to the different players that are available, obviously we're around, is super valuable. So one of the things that we actually created in one of our big 2023 initiatives is to work to connect all these different companies in the space, because we see a lot of value in connecting a lot of partners a lot of the time to tokenize an asset. Just like the traditional financial markets, you'll need a lot of players involved. That's lawyers, that's transfer agents, that's broker dealers, that's tokenization platforms. There's appraisers, on every single level. So what we do is we're trying to connect all of these different parties and make sure that they have access to each other, have access to us, and then have the ability to communicate from each other, learn from each other, and ultimately build something that works for them. So yeah, that is. So we created the STA Success Network, and that is our mission: is just to really connect people and allow them to have the most accurate and best information at their fingertips.
That's great. Yeah. All right, guys, this has been highly educational. I loved it. Let's do a quick 1-minute speed round. You ready? All right, Alec, we'll start with you. A book that's had the biggest impact on you.
A book that's had one of the biggest impact. Rich Dad Poor Dad.
It's a great one. I actually met the author when I launched my book at the Book Expo in New York, and he spent like 20 minutes with me. Awesome. We talked. We caught up. He was great guy. Herwig, how about you?
Definitely David versus Goliath, Malcolm Gladwell. Maybe right timing in my life where the words really meant a lot to me, and I made a lot of decisions based on some of the learnings that I picked up from that book. So definitely highly recommend it.
Yeah,
great book. Have never met Malcolm. All right, Alec, best piece of wisdom you've ever received.
Annual recurring revenue is the best form of revenue.
That's good. I like it. Herwig?
Love what you do, and don't let a small thing ruin a good day.
It's great. Guys, this has been great. I really appreciate it. Think community. I'm a business coach. I work with successful people from solopreneur to Fortune companies and everything in between who are successful and get them unstuck. And this podcast is great because I can have guests on that can also help you get unstuck. whatever level you're at when it comes to the education level of tokenization, I would recommend, like you hear me talk about all types of technology, AI, virtual reality, now tokenization, spend 2 minutes a day studying it. Go to ChatGPT or Jasper and type in, things I need to know about tokenization, how tokenization applies to my business. Go to Google, spend some time studying. And if Herwig and Alec can help you, reach out. Give me your website one more time.
SecurityTokenAdvisors.com.
So, and if I can help you, johndwoskin.com. I think we will all see through this decade, before COVID, they were looking at this decade, 2020 through 2030, as a decade where they were defining it by adaptability, that colleges, there were many articles and people were talking about how colleges didn't even know how to teach kids because they didn't know how to teach them into a work world where 85% of the jobs that they predict by 2030 didn't exist. And this is and so what they talked about then is that COVID actually accelerated everything. And so whether we understand it or not, we believe it's going to affect our business or not, it's our responsibility to study and begin to understand from a fundamental on up as we grow. So guys, I appreciate this master's class. I know we were going to do kind of 5 different episodes, but we decided to just do one all at once with all the topics. So this is a great extended version. I appreciate both of you and your time and your education and what you're doing and pioneering in this industry. It's great to watch, and it's great to watch the evolution of your business. Think community, thanks so much for tuning in. If you know anybody who would benefit from this, please send it to them. Rate Think Business. And I appreciate you listening. And guys, thanks so much for your time. I really, really appreciate it.
Thanks for having us, John. We appreciate the opportunity and to be on the show. And for those of you listening and watching, happy tokenizing.
Happy tokenizing. All right. Thanks, everybody.
Thanks, John.